Now, good afternoon, Mr. ID.
Alpha boss, can you hear me?
Yeah, I can hear you. So,
Okay.
without wasting much of our time, which pair should we check out?
Anyone, your best here now.
Okay,
Don't you have your best here?
let's use good.
Uh, what of a USD card?
I don't trade that, but let's use USD cards.
Anyone, sir.
Yeah, we can use anyone.
Okay.
Now, without wasting much of the time now, the first thing when you actually want to check a trade, the first thing you actually have to do is you just have to look at the bigger picture of
Yeah.
that market to know the trend of that market. I'm coming, pardon my network. USD card, right? USD card. Okay. This is the chart of US dollar against Canadian dollar. Okay. Without wasting much of our time, like I said. Now, this is a daily time frame. You understand? So it's still like a bigger picture. So in this particular, without even wasting much, US card is more or less like is more or less like an uptrend normally, uptrend market. Do you
Yeah.
understand? So after figuring that, okay, fine, it's an uptrend market. What else do I need to know again? Is checking the close, let me say the inner circle close this thing. And what I mean by the inner circle is like coming to like, if I want to judge the market now, I have to pick like some months after. You understand what I'm trying to say? So now
Yeah.
let's pick it from here. It's still 24 hours. Okay, now looking at this, what can we say? This is more or less like a ranging market. It's giving us something like a work of schematics. You understand? So now what we just have to do is now let's employ our price action strategy, which is the law of demand and what?
Supply.
Demand and supply. Yeah.
Supply.
So now without wasting much of our time, this is support. This is support, maybe a support. This is resistance. So let's just collate everything together. And the collection of all these together is the okay. So definitely this was a what? A first breakout. You call it spring. You understand? Okay, fine.
Okay.
Identified. What else? These support. Sorry, resistance. Definitely this was due to fundamental. But let's just pack it with it. Resistance. So definitely this is what we call one of the things we call the Wyckoff schematics, which is the third law of supply and demand, like I said. And the third law, like I said, says that once there's a first breakout, the first law says that definitely the price of the market has to obey the law of supply and demand. The second law says that if there's a break in either of the zone, either bearishly or bluishly, then the market has to come like this, look for another support that will make it to retest the market and come down. Yes or yes?
Yeah.
But the third law says that if something like this doesn't actually happen, and the main reason why the third law was actually introduced was because this market was not built for us to make money. It was built for these big guys to make money. So definitely, them knowing that this is the normal move for all retail traders, what do they have to do? They have to go against that move. You understand? That's why they introduced the third law that says that once the market breaks out like this, and there's a higher chance that the market can actually falling back inside that price range. But when it falls inside inside that price range again, what it just has to do is like come come to the last resistance, then come back to what? Come back to the support where the first breakout happened, just to validate the support again that is still very, very valid. You understand? So now
Yeah.
let me just that was version 3.1 of the law of, so the version 3.2 now says that most times now it does not necessarily come back to this place. Why? It can only come back to this place when you have some point of interest around this place. That is, there are fair value gaps around, or there are fair value gaps close to that zone, leaving an order block behind. In this case, leaving a bearish order block behind. So definitely, we start wasting much of our time here. You can actually spot, even in the higher time frame, you can actually spot another block here. This is the other block here. I can spot some fair value gap. You know the fair value gap now?
Yes, sir.
Yeah, we can spot fair value gaps here. That is this rate and this high and this low of the last one that is that not actually been mitigated. You understand? So definitely we still have a high chance that the market is actually coming here. Now that's what we have in the bigger picture. You understand what I'm trying to say? So now that was too much of time. Let's check the validity of what we are talking about. You understand? So now we have the spring. So definitely it means that this price of the market wants to continue in a what? In a bluish move, but it needs to what? Make some necessary moves before it continue in that particular direction. So now, looking at that now, let's go to a lower time frame to now focus on this. We've actually seen what we want to focus on in the higher time frame. So let's go to the lower time frame to focus on these parts. You understand? To know when we're actually going to join the sell or when we're actually going to join the buy. So now let's go to maybe 4 hours. Let's jump to 4 hours time frame. Because one thing you people actually underrate about this thing is what we actually saw in the bigger picture was actually very simple using the law of demand and supply. You understand? But the more you divert inside lower time frames, that's when you actually have to use your advanced learning and your psychological thinking. You understand? Because trading is actually like a game of chess. So you have to think of every move of these people. So now, what are the validation of an uptrend? We said the validation of an uptrend is the creation of higher high and what? Higher low. The validation of a downtrend is what? Lower high and lower low. You understand? When you want to actually, for instance, make, let me say, enter a trade or see when the trade is actually ready for a reversal. You understand? There's other things you actually you have to put so many things into consideration. Now we're actually in this shorten into the lower time frame, we'll be making use of so many things, both price action and SMC concept. There's nothing like price action is different from SMC concept or ICT concept. When I'm actually hearing this, I always laugh because I just feel like that's because you don't understand the market. That's why that source can actually come out from your mouth that ICT is different from price action. It is the same thing. It's just that before you know the law, before you can break the law, you have to know the law. The law is price action. You understand? ICT is more or less like thinking like these big guys in a way that they can actually manipulate the market. So if you don't know price action, it will be difficult for you to know the ICT, to spot out the liquidity in this market. So now let's leave that. Now, this was actually the zone, the resistance zone. Okay, for instance, let's assume something like this has not actually happened, and we're actually looking forward a good time to enter this particular market. Now, in the higher time frame, probably just draw something like a trend line. You understand? All these things add to your confirmation. There's nothing that, oh, can come, we don't have to force it, but at least I have to pick like two. It has to pick like two. We are not forcing, we want to pick like, so we have 1, 2, 3. So now looking at that, probably there was a first breakout around this place and it came back to that price range and came back for a retest because of the other block around there. So that's that about that. Now, looking at this now, probably. I want to assume that this has not actually happened. So let's start from, okay, let's start from here. Okay. Okay, let's start from here. Okay, obviously the market was actually around this place. Let us say around this place. Let me put it a little bit. Around this place here. Probably I was expecting it, you understand, to make a reversal. Okay, so coming here, I spotted another block around this place, OB here. I spotted an OB here. And when the market mitigated the OB, this place, can you see this spot? Can you see it?
Yes.
So now another thing is, I want to explain another thing. We have internal and external order blocks. Do you understand?
Okay.
External order blocks are other blocks that are left at the high and the low of the market. For instance, if this was supposed to be the low and this was supposed to be the high, you understand? The other block that exists around this place is called the external bearish order block. Why the one that will be here will be called the external bullish order block, you understand? And we have internal order blocks. You understand? Internal order blocks will exist in between from this high to this low. And the work of this internal order block and external order block are different. You understand? The work of an external order block is that when the price of the market reaches an external order block, there tends to be a reversal, a change in trend. You understand? But internal order blocks, when price hits these internal order blocks, it just makes that order block to serve as a validation of for a creation of rallies. Do you know understand what I mean by rallies?
Yes, yes.
Rallies are the creation of the high and lows, high and lows, high and lows, high and lows, high and lows. So definitely, if you're actually looking for instance, maybe you wanted to enter a sale around this place. You understand? But you missed the entry. You understand? And when you got to wake up, you saw that the price of the market was already around this particular place. You understand? You can't just enter the market here because it's at a premium price. All you just have to do is what? Wait for a pullback or just pause. Okay, God bless this. Now, see this. This is an example of what? External order block, external order block. This is what? An internal order block. If you notice, you see that the market used, when the market is this internal order block, it's used it to create a what? A retracement move. You understand?
Yeah.
So you as well, you could have just, you believe that, okay, probably since the market actually is the external order block, there will be a change in what? A change in, or let's say there will be a retracement, you understand? And one thing again is like, when you actually want to work with your order block, always make use of the last order block. Do you understand what I'm trying to say? Make use of the last order block. Now, let me share you the psychology. What I mean by that is, for instance, you could have actually entered here because there's an order block here and there's another fair value gap here. Why this one here? Why this one here? Now, what's the psychology behind order blocks? The psychology behind order blocks is that these people place an order, or these people place an order, and that make the market to move in such a way, let me say, a pressurized movement. You understand? That's a powerful movement. Their order cause the market to move in a what? Powerful movement. So definitely there's an order block here and there's an order block here. You understand? It's actually showing us that these are the places where they entered their trade. You understand? They might actually be different big boys. This might be Access Bank and this might be Zenith Bank. You understand? But if you want to, if you tend to think that, okay, finally you want to make use of this place, you understand? What will happen to this order block here? Because they actually put their money here. In this, Access Bank put their money here. Zenith Bank put their money here. And once they put their money, they have to take out their money, yes or no?
Yes, sir.
So definitely, and when they take out their money, you understand? Or if you take out their money, you are not saying that, for instance, that you want to make use of this place. What will now happen to the person that put their money here? What will happen to him? He will definitely have to take out his money too. You understand? So that's why you always have to use the last order block, because it has already mitigated. It means that as long as it has mitigated this order block here, they've closed their order. So it has to go and meet the next one. It's not every time that you can actually like predict the market. It's not every time that you have to predict the market. It's not every time that you have to make the market. You understand? Sometimes I just have to wait. You have to be sure of what you are doing, and it pays off a lot. You understand? So now, as we were saying, so definitely you actually make this order block here, just the tip, you know how this order block things work. Just put your entry at the tip, and your stop loss above the high of the other block or low of the other block, depending on if it's a bearish order block or bluish order block. Then probably you as an IC trader, you expected, okay, these people you are thinking like they don't waste time in the market. So definitely you too, you don't actually need to like waste a lot of time in the market. Probably when you want to take your TP, what you're actually going to use for your TP again would be insignificant support or resistance, and internal order block and external order block. All these things falls onto the area of pivot points. There's something we call pivot points, you understand? Pivot points are like key areas, key amounts. That is when the price of the market is these particular areas, there tends to be a change in direction or retracement, you understand? So we have to be like really very, very careful about these key points. And like I said, the insignificant support or resistance or demand and supply or order blocks or last high or old high, all these falls as an example inside the pivot points, you understand? Or you can call them key levels, you understand? So now if you actually want to take your TP, the thing you actually be considering again is like, you have to consider this, because this was the support, this was the resistance, and it was broken. That's why I say you can never just use your hand to wave away price action. You understand? Because left to me now, I can say, okay, it's actually going to come here to mitigate this other block here. And as you can see, it just stopped at what? It stopped at what? It stopped at the top of this. You know what I'm trying to say?
Yeah.
So probably if you actually want to take your TP, this will be your TP1. Forget the closeness. Pips is pips. A plus 1 pip is still a pip. This will be your what? TP2. You understand? And when you want to take your TP3, you put your TP3 here where? Somewhere around here. You understand?
Yeah.
So that's that about that. So now let's go. So we took our first TP here, but we noticed that there was a change in direction. You understand? And the fact that I actually came back to this other block, I'm still a little bit confused. So what will I do? I will still try to like monitor the trade and think, okay, what's actually happening? You understand? So after doing that, I saw that okay, that's actually spotted some 2 equal lows that I can actually draw a trend line. I drew the trend line. It came to somewhere around there, broke the other block above a little bit. Okay, I saw that I actually spotted another line. I drew these 2 lines. So now let's see what we're having after that. So the market was coming, it was coming. Fine. Already before, I should have actually even knew that the market was actually coming up here because this price has not actually fallen inside this zone. You understand? So now let's go back to our time frame and see the exact place, our point of interest in the zone that the market actually came to come and play with. Control R. Okay. We have 0.1 here. Okay. Tell me this is not equal. Okay. Now, this there are things that we actually have to notice as well too. Now, these are equal I. An equal I has actually been formed in that zone. Can you listen? Are you listening?
Yeah.
An equal I has actually been formed in that zone. So definitely, when the price of market is actually coming up, you understand, your buy side liquidity will be what? Above those equal I. Do you understand?
Yeah.
So now let's check if you can actually see maybe another block above that equal I's. Actually, there's another block just above, a little bit above. It's like, can you see this other block here?
Yes.
But when we check this other block very well, we'll still see another block inside of it. So this is what we want to check. This zone, this movement here. So let's paint it in another color, maybe purple, so that we know what we are doing. So let's switch to a lower time frame or probably 2 hours. So that we should see a lot of movement inside that. This is the problem I have with this. Okay. All right. Come on. A little bit. Come on. Come on now. Ash. Okay. All right. I think it was even 4 hours we used the other time too. Looking at that, let's pick this candlestick. Let's use this candlestick. Can you see it?
Yeah.
Now let's use the tip of this candlestick here. I still wish to switch to a lower time frame because we still see the real order block in that to mitigate. You understand? But it has actually like obeyed so many laws. It has actually broken the equal I, pick the buy side liquidity. You understand?
Yes, sir.
So now this combined with price action now, the fact that it has actually broken out of this okay, don't let us get there. Okay, don't let us come to this place first. Okay, the fact that we've actually like spotted the other blocks here. Now, definitely, what I'm actually expecting, because I won't lie, what I'll be expecting is that, okay, fine. Is this another block here? Should we call it another? Yeah, it's actually an other block, but not really that strong, because you understand the price of the market has actually been balancing around that particular period of time. So now, but the fact that I'll be expecting, okay, definitely if I actually want to enter my buy, because I've already spotted my point of interest, you understand? Yeah. So I'll be thinking of a good way to enter a buy. This will be my first entry, that if the price of the market should come to this particular other block here, I'm actually going to enter. Yes. And this will be my second entry, that if the price of the market should come to this place, I'm actually going to what? Enter my buy. But unfortunately, it didn't actually touch any of these two. You understand? But still, my money is what? My money is still secured, and I have peace of mind. That's why I say it's not every time that you enter the market. You understand? So now, I waited, and I saw that, okay, there was a breakout already. So what was expected of me is that probably maybe I should enter my buy, you understand, from here, and close around my point of interest. You understand? That's left to me, depending on what I want to trade. But when I saw that the market actually taking out my equal highs again, you understand? Already in my mind, I would have actually already know that this is more or less like a first breakout here. Because if I actually even switch to a line chart, it's showing me that this is more or less like a false breakout. Just what I'm trying to say. That definitely the price of the market will still falling back inside. And when it's falling back inside, it has to mitigate that zone. You understand? And when I'm actually going to check again, I saw that probably there should be another block around that zone. You understand? Now I have another block here. I have another block here. And I have another one here. You understand? Are you with me?
Yes, sir.
Okay,
Yes,
now.
sir.
Okay, without actually even looking at it, which one do I think the price of the market will actually come and meet in these two? I said we should always use the words. We should always use the last order block.
So,
You understand? But now,
okay.
how should I explain this? Okay, just don't let me take it to that advanced level for you so that you actually not be confused. Always just use the last order block. For now, for you, always just use the last order block. Do you understand? That is if they are close to each other. That doesn't mean that there's another block here and another block here that you have to wait to reach here. That's if they are close to each other like this, closer to each other like this, closer to each other like this. Can you see it? That's when you should wait until you meet the last order block. So now, but unfortunately, part of the market came to this other block, even broke it. No, we can't actually even use this actually, because look at the low of the candlestick. You can't use this actually. I would have actually used this. You understand? But the price of the market, I don't think it actually came back there. I don't think it came back around that place. I don't think so. But normally, the next thing you can actually do again is, this thing is actually like very, 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 very easy. The next thing you can actually do again is, now let me now tell you something. Now you now look at the validation of an uptrend. You understand? Now this market was actually going in an uptrend. You understand? Creating an higher high, higher high, higher high. But this was the last, let me say, last valid. Let me use that word. This was the last valid higher low. You know why? Because it still has too low. They call it intermediate. You understand? But they just tend to make things difficult. But let's just say this was the last this was the last higher low, because it still has like two lows in beside of it. You understand? There's a low here and there's another low. You understand what I'm trying to say? Like that's the last low. It has like a low around this here. You understand what I'm trying to say? If you actually want to make it up, if you actually want to find, let me say, a very strong high or a very strong low, a very strong higher high or a very strong lower low. You understand? It has to be something that probably, if this is the higher high, it has to have a low here and another low below it. That means that it's a very, very It's a very, very strong high. And you can actually use them for either Fibo retracement, Fibonacci retracement, or when you want to use your validation of or higher high or higher low. Do you understand? So now we are using this one, we are considering these ones because they still have two lows in between, you understand, which makes it like the last like low. You understand? So now, this being the low, come on. Okay, this being the low, we saw that it has actually been what? It has actually been broken. You understand? So there's this, I know that you should actually not be strange with that. There's a difference between BOS and CHOCH. You've heard of a CHOCH. You know it's right.
Yes, boy.
Eh?
Yes, boy. Yes, yes.
Now, let me explain that COH again. Now, COH work in form is in a form like, let me say, is in such a way that let me draw this. Probably the market was actually going an uptrend. Our belief is that the new higher high and the new higher low must be higher than the previous higher high and higher low for an uptrend. Yes or yes? But anything that makes the new forming to be the new forming of the low to be lower than the previous low, which is number 4 here, that means that it actually was broken the validation of that uptrend and created a swing failure for the uptrend. And what we expected is what? Expected a downtrend movement. You understand? Now, let me now explain this thing psychologically now. Now, this is more or less like, this is the what? This is the BOS. This is BOS. BOS. That is the market of the breaking structure, retracement. That's the BOS. You understand? But now, this change of character is that what's expected is that this number 1 here was not expected to break below number 4 here. You understand? Because it's in an uptrend. But for it to have done this, definitely it means that there wants to be a change in direction. And when there's a change in direction, you understand? This is what? This is now what? A lower low. This is now what? A lower high of the new continuation of the downtrend. You understand? It's still an higher high for the end of the uptrend, but it's still what? A lower high for the new beginning of a what? Of a downtrend. You understand what I'm trying to say? So definitely this market has to what? Create, since there's already a lower high, it has to create what? It has to create another lower high. You understand? So now, how do we know the particular point where this market is actually going to come again? You understand? Is you now actually are going to now look at your what? Look at maybe your point of interest around that zone. You understand? Sometimes you can actually use your Fibo. You can use your Fibo. When you pick your Fibo, you have to customize your Fibo and make it to have a golden ratio. Normally they say the golden ratio is 0.50, 0.31, 0.8, and 0.61 something. But you have to customize your golden ratio to have like 71.0 and 79. You understand? So this retracement most times happen around that 71 to 79. You understand? So without wasting much of our time, you see that this one I actually even do should be around 0.7 something. I don't know. You understand? So
okay.
Now looking at that, and that's because you can actually have another block here, have another block here, have another block here. So let me explain this. If there are a series of other blocks here, let me explain what can actually happen and why it's actually now good to wait. Now let me make it bigger, like this. Okay, the storage happened. Now I always make use of the last order block. The markets can be tricky. You understand? If there's an order block around this particular place, this market can actually try to come like this, then come back. In your own form of mind, people will say when you spot a reversal candlestick around some particular enter, it will form that reversal candlestick around this place for you. Should be the reversal you want. It will form it, and once you enter, that's why you could just knock it like with big lot size, and you just see that probably it comes like this, bam, and when it's reach here, it will be consolidating. But you are still expecting it to come down. It cannot come down. It's playing with our game of mind. But you already understand the psychology behind it, that it cannot go say until it peak and the other year. You understand? So it will just use this one to form equal low. And you know what's actually about this equal low is that it will now come here again. Now, let's expect that the other block was around this place. You understand? On this normal move here that the market wants to sell, a lot will happen to shake a lot of people out. Not every time, but for you to know when it wants to happen, that's when you'll be spotting, to be creating a lot of liquidities around those areas. And until it clears those liquidity, the market will not sell. So we have to be like very conscious and very, 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 very careful. You understand about that? Now the other block you're actually going for is around this place. You understand? But the markets will now come out again. And now take out this equal lows here, but this is actually liquidity too right now. After taking these two equal low out, it's now come up again. Now take the real last order block. You understand? To now continue in this movement. Do you understand what I'm saying? That's one. Now, secondly, let me tell you what you can actually do again. And all these things are judging from experience. You understand? This might be the last. I'm coming up. We're actually running out of time. So I just hope with this one, you get what I'm saying. So even though this one disconnects, you understand? Use the link to connect again. Do you understand, Mr. Edi? So now,
Okay.
let's just say this was the I overall at time I, like this number 5. Yeah, this is it here. Now, you know what actually happened against that? The market might make something like this. Do something like this. You can do something like this. Let me see something like this here. We create 2 equal I on top of it. You understand? Before breaking, okay, I made a mistake here. I will correct it. Should be here. Do you understand?
Yep.
What would the market do? Don't expect the market to move until it takes out this liquidity up here. Don't even expect it. It might move in stupid ways to confuse. You know what they do is just shake emotion, shake people's emotion. That the fear of missing out, they will put it in everybody. Don't be angry. You know what you are doing. Just wait until take this thing out. You know the funniest thing is that these things always go a long time with when news want to happen. You understand? If something like this actually happened, that at least you're expecting it to just, it's very easy for you to just take out these 2 equals and continue that movement. But instead of taking them out, you understand? It's just consolidating around this, going play. Definitely, it's just waiting for the news that will serve as a momentum to push it. You understand? And most especially, the news are now like 3 news that want to happen at the same time. You understand? Be expecting it. Okay, fine. Probably the first news will be a for instance, maybe this USD card now. Maybe the first news will actually be a bad news. Then the next 2 news will be a good news. And you know that if the first news is actually a bad news, what will happen? If the first news is actually going to be a good news, what will happen? USD will buy against card. And the next 2 news are bad news. That means there will be a drop in USD card massively. You understand? Though the market actually has to obey this news. You understand? So the news might just put that first good news will serve as a momentum to just push it a little bit fast forward to break this high, this 2 equal high. If now starts coming down.
Yeah.
You understand? That's why you actually have to know what you're actually doing. When you're actually doing it fundamental as well. You understand? That's why I say that we have tradable and non-tradable news. If the news is actually going to occur one time, that is just a one-time news of high impact at a time, not that they are 2, is still okay, but they are already going to 3 or 4. My brother, stay out of the markets. Let the news happen. You understand? When the news is done happening, you will still see a lot to it immediately after the news has stopped. You understand? If it is 1 news or 2 news that want to happen around that particular time, you can still like make it. You understand? Because now we're expecting, for instance, now in this moment, now we're expecting 2 moves, a bearish move and a bullish move. So definitely, the market can never give you, if you have something like this, the market can never give you a good news and a good news. Because the market should give you, if the market can never give you a bad news, because actually expecting sell, a bad news and a bad news, because it will leave a liquidity around this place. And if it's a sell, you know, the market will fall drastically down. And before it can actually go back to take out this liquidity, they've actually entered debts. It can't happen to them. So it always has to be like, if you have something like, it always has to be good news and a bad news. And when the good news will just push it up and the bad news will just push it down. Do you understand what I'm trying to say?
Okay.
So that's that about that. So now let's go back to what we're doing. So now coming here now, we'll see the CH now. You understand? We know that, okay, for sure, this thing wants to create what? This thing wants to create a downward movement. So definitely, when we want to join the sell, probably we didn't actually join the sell from year to year, but we are actually expecting to join the sell in 2 places, either year or year. Now, we are not yet sure now, because another thing is that this is actually like, this was the equal high it broke, this line. So definitely this is the liquidity part. So is it expected for it to come to this place? We don't know yet. So let's make it of our FIBO again. You understand? Anyone that falls around that 70, close to 70 something. You understand? So this is 73. Oh, let me see very well. This is let me try and change that color. Okay. This is 78. So most likely we use this one. You understand? Most likely we use this one.
Yeah.
Or let us say we knock it. Let's use like this. I'll explain the way I'm actually going to enter. We knock it with, because we are not actually very, very, very sure. We knock it like with a low lot size. We knock with a low lot size of 0.05. You understand? You understand?
Mm-hmm.
So probably what actually happened around here. I don't even want us to be checking this thing with date and time, so that we can actually be checking the fundamental with it. This was not showing me the date though. We have less than 3 minutes. Let us cut this one. So you join with the link again.
Okay, okay.
Okay, so let me save this.